Warren Buffett vertical bar, how to invest in 2023 for beginners. 3 simple rules. Hello viewers, welcome to my YouTube channel. Today in this video, we will talk about how to invest in 2023 for beginners by Warren Buffett. So let's get started. Warren Edward Buffett is an American business magnate, investor, and philanthropist. He is currently the chairman and CEO of Berkshire Hathaway. He is one of the most successful investors in the world and has a net worth of over $100 billion as of November 2022, making him the world's 6th wealthiest person. Buffett was born in Omaha, Nebraska. He developed an interest in business and investing in his youth, eventually entering the Wharton School of the University of Pennsylvania in 1947 before transferring to and graduating from the University of Nebraska at 19. He went on to graduate from Columbia Business School, where he molded his investment philosophy around the concept of value investing pioneered by Benjamin Graham. He attended New York Institute of Finance to focus his economics background and soon after began various business partnerships, including one with Graham. He created Buffett Partnership in 1956, and his firm eventually acquired a textile manufacturing firm called Berkshire Hathaway, assuming its name to create a diversified holding company. In 1978, Charlie Munger joined Buffett as vice chairman. If you want to invest like Warren Buffett, you don't need to do anything extraordinary. In fact, many new investors are surprised at the uncomplicated investment style of the Oracle of Omaha. Buffett invests in great businesses trading for less than their intrinsic values, and then he holds the investments for as long as they remain great businesses. Obviously, there's more to the story than that. In this article, we'll dig a little deeper into Buffett's investment style, provide some real-world examples of how he's implemented his investment philosophy, and list the stocks he does and doesn't invest in. Buffett's 3 best rules for stock investing. Berkshire Hathaway's 2018 annual meeting, led by Chair Warren Buffett, has put renewed focus on the master investor secrets for choosing successful stocks ranging from Apple Inc., APL to Coca-Cola Inc., Co to Delta Airlines Inc., all while anticipating the Oracle of Omaha's upcoming moves. The latest in-depth analysis of Buffett's approach is presented in a report by CNBC. It examined decades of public comments by Buffett and came up with 3 core recommendations for buying stocks that Buffett has made, including at annual gatherings like the one this past weekend in Omaha, Nebraska. These are: invest within your circle of competence, think like a business owner when buying equities, and buy at inexpensive prices to provide a margin of safety. From 1965 through 2017, CNBC calculates that shares of Buffett's Berkshire Hathaway Inc., BRK, have delivered an average annual return of 20.9%, more than double the 9.9% return for the S&P 500 index SPX. The upshot, they add, is that the cumulative gain for Berkshire Hathaway stock was 155 times greater than that for the S&P 500 over this period. The biggest long-term winners in Berkshire Hathaway's stock portfolio over the past 10 years have been these, according to Lawrence Myers, a portfolio manager and CEO of consumer finance company PDO Capital, per report today in Yahoo Finance. Apple, plus 665%, Visa Inc., V, plus 556%, MasterCard Inc., MA, plus 583%, and Delta Airlines Inc., plus 550%. Circle of competence. One key rule is that Buffett believes investors should avoid going too far afield when buying stocks. Instead, he says investors should make sure they fully understand how a business operates, how it makes money, and the future sustainability of its business model and profits before buying its stock, per CNBC. He called this operating within what I call your circle of competence during the 1999 Berkshire annual meeting, as quoted by CNBC. In their own recent attempt to identify potential future purchases by Buffett, analysts at Credit Suisse Group AG noted that he prefers easy-to-understand businesses, with the notable exception of smartphone and personal computer maker Apple Inc. Buffett has passed up on a number of winning investments in the technology field precisely because he did not feel sufficiently competent to judge their business models. Berkshire recently increased its large stake in Apple, but has been a relative latecomer to the stock, based on Buffett's caution about treading on unfamiliar ground. You're buying a business. A second key insight that Buffett gained as a college student in 1949 came from reading The Intelligent Investor, the seminal book by value investing pioneer Benjamin Graham. As Buffett said during the 2002 Berkshire Hathaway annual meeting, per CNBC, you're not looking at things that wiggle up and down on charts. or that people send you little missives on, saying buy this because it's going up next week, or it's going to split, or the dividend's going to get increased, or whatever. But instead you're buying a business. The key tenet of Graham's book, according to CNBC, is that buying stock makes you a part owner of a business, someone who should not be concerned about short-term fluctuations in stock prices. Indeed, Buffett believes that such price fluctuations, typically called volatility today, represent temporary noise that should be ignored by long-term investors. Margin of safety. A third rule that Buffett has taken from Graham is to buy stocks with a large margin of safety, investments that currently sell significantly below their intrinsic value. As CNBC notes, taking this bargain hunting approach to investing should limit your potential losses in case your estimate of intrinsic value was too high, or if unforeseen events damage a company's once rosy prospects. Of course, coming up with an accurate estimate of intrinsic value is not easily reduced to formulas, but the Graham method, as employed by Buffett, rests on rigorous fundamental analysis of the data pertinent to a company, its industry, and the general economy. Buffett stands out in his decades-long ability to make astute judgments of value. Never look at a headline. For the average investor, who lacks Buffett's analytic prowess and sharp eye, he believes that just casting your lot with the long-term prospects for the U.S. economy and the U.S. stock market may be the safest bet. The best single thing you could have done on March 11th, 1942, when I bought my first stock, was buy a stock index fund and never look at a headline. As if you had bought a farm, he told CNBC earlier today, noting that a theoretical $10,000 investment in an index fund back then would be worth more than $51 million today, including reinvested dividends. Buffett's worst picks. To be sure, Buffett has chosen a number of losers. Buffett's worst performers during those 10 years are also per Lawrence Myers. Teva Pharmaceutical Industries Limited, Teva minus 52%, Bank of America Corp, BAC minus 15%, and Building Materials Company USG Corp, USG plus 14%. The S&P 500 is up by 77% over the same period. Buffett's enviable overall record, though, confirms how valuable his 3 best investing rules are to investors. Digital asset trading just got easier. With OKX, a leading digital asset financial service provider, you can access world-class security as you trade and store assets. What's more, you can win a mystery box worth up to $10,000 when you complete a deposit of more than $50 through a crypto purchase or top-up within 30 days of registration. Which stocks does Warren Buffett avoid? Buffett avoids investments he doesn't understand well. That's the main reason you won't find many high-growth technology companies or biotech stocks in Berkshire Hathaway's portfolio. They're not necessarily bad businesses or overvalued, but Buffett knows where his stock-picking strengths lie. One final takeaway is that just because Buffett avoids a certain sector or industry doesn't mean that you also have to avoid it. You can invest like Buffett by sticking to what you understand. So this was our today's video. I hope you all liked this video. Don't forget to hit the like button and subscribe my channel. And also share it with your friends and family. We will be back soon with a new video. Till then, keep supporting and take care.